Good morning. Welcome to Stock Market Today. It's Friday, August 30th, 2019. Final trading day of the month. I am your host, Dan Russo, Chief Market Strategist at Chaikin Analytics. Find me on Twitter at Dan Russo _ CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com/today. Sign up for a free email so you can follow along with this show, as well as get daily stock ideas for you to consider in your inbox every trading day before the market opens. So U.S. equities finished higher in Thursdays, trading near the best levels of the day. Treasuries were weaker across the curve. 30-year yield was higher, but still below 2%, while the 10-year moved over 1.5%, and the 2-10 spread remains inverted. The dollar was stronger on the major crosses. Gold finished down 80 basis points, and WTI crude settled up 1.7%, near the highs of the day. As we get to the desk this morning, S&P futures are up 70 basis points. Final trading day of the month, as we said. Asian markets were mostly higher overnight, with Japan up more than 1%. European equities are seeing some good gains here this morning. Treasuries are weaker across the curve. 30-year bond is still below 2%. 2-10 spread still inverted. Dollar is weaker versus the yen, stronger versus the euro. Gold down 10 basis points, and WTI crude is giving some back, trading lower by about 90 basis points here this morning. Taking a look at the S&P 500 now, let's dig in. We are testing the top end of the August range. We've been talking about this range-bound market for a while, and now we're pushing up against the top end of it. Futures this morning actually have us at about the 29.45 level. As of this recording, we are on pace to break a 4-week losing streak for the S&P 500. Now, down below, support still remains in the 2,800 to 2,850 zone. Resistance is still in that area around 2,950, and then above that, we have to start thinking about 3,000 round number resistance up there. RSI showing signs of life as it ticks above 50 for the first time in a while. Not out of the woods just yet as far as this indicator is concerned. Still would be considered in bearish ranges, but we highlighted yesterday how there was a higher low for the S&P above support, and we've had now a couple of higher lows for the RSI. So starting to move in the right direction. Out of the woods just yet? No. But on the margin, getting a little bit better? Absolutely. Chaikin money flow remains bullish and is ticking higher. And we'll notice that during this consolidation, it stayed bullish. So that is a positive indicator for the market in general. But we are going to test the top end of the range here. It looks like we're going to test it this morning. We'll see how the day trades out. I will point out that it's likely to be a thinly traded session, as this is the Friday before a holiday weekend. So just something to keep in mind. Taking a look at our market in a minute now. What am I writing about in the note today to Chaikin Analytics clients? Stocks rally for a second day to test the top of the range. The key themes that we look at continue to point to risk aversion in the marketplace. And we'll take a look at a couple of examples of what that means. One of the main themes that we like to focus on for the market in general, though, to give us clues, are semiconductors, and they do remain above relative support. FAANG stocks are still in a consolidation, and that has kind of lined up with the trading in the broader market. Futures do point to a higher open today, as we said. Turning now to the power bars. For the major averages, you can see all of the major averages were up more than 1% yesterday. The Dow up 1.3%, but still only 2 bulls for 8 bears. S&P 500, 1.3% to the good, 78 bulls to 98 bears. NASDAQ saw some improvement with its outperformance yesterday, 21 bulls, 24 bears, but getting better. Small caps tilted back to the bullish side, 396 to 383, as that group outperformed for a second day in a row. It's not often that we've been able to say that, but it is the case now. Keeping an eye on small caps. They held support on an absolute basis, but if you look at IWM, still some solid resistance just overhead. Bonds down, tick sending yield slightly higher. Tech was the main outperforming sector yesterday, up 1.74%. 12 bullish or very bullish stocks in the tech sector for 13 bearish or very bearish stocks. According to the power bars, small cap stocks are somewhat more bullish than large cap stocks. Major markets across the board are mixed. Our stock of the day today, INTL, coming from us from the Investment Brokers and Managers Industry Group. INTL closed at 39.28 yesterday, up 1.89% for some solid outperformance. INTL has a very bullish Chaikin power gauge rating due to very attractive financial metrics, strong price volume activity, as well as positive expert activity. 20 factors, 5 of them in each of these 4 categories give us our very bullish rating. Now, we're on a very bullish rating, but the stock is still an underperformer. Market and model not in agreement yet. Remember, there are 2 main legs to this stool. The power gauge rating is the first leg that we look at, but it's not enough for it to just be bullish. We want to see outperformance as well, because at the end of the day, that is where the focus is for the majority of investors, names that are outperforming. Money flow has been a little bit squishy, more bullish than bearish, but slightly tilted to the bearish side as the stock wrestles with the long-term trend line that appears to be in the process of shifting from declining to flat. Closer to overbought than to oversold. So really a mixed bag for INTL here. Want to keep an eye on it, want to add it to a bullish watch list, but not super exciting just yet. But we will keep an eye, because if the relative strength continues to improve, it might make sense to take a look at this as a long idea. Let's look at our sector tracker now. Movement of the major sectors over the last 5 days. A lot of movement here with the 2-day rally in equities. Comms moved to the top of the list. Utilities still hanging out at the top of the list. Discretionary, we'll see how that trades here today. Ulta under a lot of pressure here this morning. Industrials, so some of the trade sensitive areas of the market are starting to perk up with some better headlines. But again, we've seen this story before. Real estate and staples continue to outperform. Financials and materials, middle of the road. The declining groups over the past 5 days: tech, healthcare, and energy. Energy just remains a group to avoid. Have a little bit of a rally here over the past couple of days with crude oil, but we note that crude oil is giving it back here this morning. Our industry in focus is one that we've talked about quite a bit in our notes of late. Home builder services. Over the past 6 months, it's been an outperformer, outperforming the S&P 500 by 3.78%. And the power bar ratio tells us that that outperformance is likely to continue, as there are 13 bullish or very bullish stocks in the group for 5 bearish or very bearish stocks. And it's currently ranked number 5 of the 21 subsectors that we track. Now, it has moved down 2 slots over the past week, but still a leading industry group for all intents and purposes. Some of the indicative names there. Now, what I will say is I took a look at all 3 of these names. They all look great from a trend perspective. They all look good based on a lot of the metrics that we look at Chaikin Analytics, but they are closer to overbought than to oversold. But names that you want to keep in mind potentially as long ideas when they become oversold: Taylor Morrison, TMHC, Pulte, PHM, and MI Homes, MHO, all have very bullish Chaikin power gauge ratings. Now let's just take a look at the fund itself now. XHB, the Spider S&P Home Builder ETF, bullish Chaikin power gauge ETF rating, and you can see just a nice steady uptrend. Long-term trend line acting as support to near-term pullbacks. Been an outperformer since the January timeframe. So this has been a leading group all year. And throughout that time, Chaikin money flow has been persistently bullish. Now, similar to those 3 stocks that I mentioned, the fund is closer to overbought than it is to oversold. But this certainly is a group where we want to be focused for potentially bullish ideas at the individual stock level. When we talk about identifying leading industry groups, this is a great example of that. 13 to 5 bulls to bears, an outperformer, bullish money flow, nice rising trend that's been acting as support. So home builders are an area of the market where we continue to want to focus when stocks in that group, leading stocks, become oversold. Let's look at what's trending now. Yesterday's S&P 500 gainers and losers, our movers and shakers. Dollar Gen up 10.5% following their earnings announcement. Phillips Van Heusen PVH 6.25% following some good earnings. National Oil Well Varco, oil helping there, and that stock caught an upgrade, up 4.85% on the day. MPC, Taxon 4.8%, rallying with oil. It didn't see any real news to send URI higher by 4.7% on the day yesterday, but I will note that URI continues with a bearish Chaikin power gauge rating. On the loser side of the board, H&R Block, HRB, down 9.3% following their earnings announcement. Bearish stock and remains so. Best Buy down 8% following their print. Altria, MO, and Philip Morris, PM, coming under pressure as there's an investigation into advertising tactics around the Juul product. Obviously, it's been a lot in the news lately around the effects of Juul, and some questionable advertising practices perhaps has pressured those stocks. And we will note that these two stocks are a bit of a special situation at this time, as there is potential for them to reunite. MKTX down 3%. Didn't see any real news to account for the weakness in the stock there. It does have a neutral rating. So let's dive in. What are we talking about today? As you all know, longtime listeners, longtime readers, anybody who knows me and how I view the markets knows that I pay particular attention to what the semiconductors are doing, especially on a relative basis. This relationship, semiconductors to the broader market, is positively correlated to the market. So when semis are outperforming, i.e. this line is moving higher, the market tends to do well. Now, what you'll notice is we've been in a choppy range for about a year and a half, 2 years now. And so is the market, really. The market's really been choppy and it range bound since January of 2018. But what's encouraging to me is this shift in the RSI, or the potential shift. Notice that as we move to an overbought reading here, now on the pullback, we've held in bullish ranges, and we have a series of higher lows for the RSI. And then on an absolute basis, we can see that semis are holding above support. So if you're a bullish investor, you want to pay attention to this relationship really closely, because if it continues to hold support here and then begin to move higher, that would carry bullish implications for the market itself. Should we break down and ultimately come back down and test these lows, that would carry bearish implications. And what I would note is this relationship tends to move ahead of the market. I mean, a great example of that is look at how it bottomed out in November of last year, ahead of the market bottom in December, and then it topped out ahead of the market here back in late April before the market topped out in May. So just something to keep an eye on. I watch it closely. I think you should too. Trends, though, in the relationships that we look at still support defensive positioning. What we're looking at here is S&P 500 consumer discretionary relative to staples on an equally weighted basis. And we do that to account for the fact that Amazon is close to 25% of the discretionary index. And what we can see is that discretionary is underperforming staples. So when discretionary is underperforming staples, that's a sign of risk aversion in the marketplace, right? Think about what discretionary stocks and companies sell relative to what the staples sell. You can understand that investors are positioning defensively when staples are outperforming. So when this line is heading lower, that's exactly what that means. Below the 200-day moving average, RSI in bearish ranges. So investors continue to position defensively in the marketplace. I would note that consumer staples is one of the leading industry groups. And in my note today, I kind of highlight that over the past year, if you look at the performance of the major sectors, the groups that are leading, top three groups, REITs, utilities, and staples. That screams defensive positioning. Another aspect that screams defensive positioning is high beta versus low volatility. When the line is heading lower, it means high beta is underperforming. Now, investors, when they're seeking risk, they tend to own high beta stocks because they're looking to outperform the market. But when they are risk averse, they skew to low beta, and that's what's happening here, below a 200-day moving average, which is steadily declining and has acted as resistance. RSI is a little bit more mixed, but currently in the lower end of the range, and we are below key resistance levels from a ratio standpoint. So again, just pointing to the risk-off nature. What does that mean? Does that mean you run to cash? Absolutely not. It means you skew your portfolios to the areas of the market that are outperforming. There's some quality names that you can own in these groups, and we tend to try to point them out to you when we think they make sense. Finally, it's interesting to note I built a custom index of the FAANG stocks, Facebook, Amazon, Apple, Netflix, and Google, and they have been in a consolidation for more than a year. Now, they've found support at a slightly rising 200-day moving average, but remain below resistance at the highs. And what's interesting to me is that as this group has been choppy, so has the market. Now, they've been an inline performer on a relative basis. RSI is middle of the range, so not really tipping its hand, but I just think it's kind of interesting that as the FAANG stocks remain in a consolidation, so does the market. It would be nice to see these FAANG stocks get in gear and break to all-time highs. That's going to wrap it up for today. I hope everybody has a great weekend. I'll see you Tuesday.